Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets nobody else wants to tell you. And boy does Figma have some interesting secrets this time. Today we're diving into a fascinating filing from Figma, the design giant. Now this isn't a full quarterly report, but it's packed with good stuff about their financials and some really important updates for their investors. First off, Figma dropped a press release on September 3rd announcing their financial results for the quarter that ended June 30th. This means they're sharing how they performed in the first half of the year, and we'll get a peek at those numbers. Remember, Figma is that super popular online design tool that lets teams collaborate seamlessly. They became a huge deal, especially recently, and keeping tabs on their financial health is crucial for anyone interested in the tech world or investing. Figma is publicly traded on the New York Stock Exchange under the ticker symbol FEG. This filing is a standard current report that companies file when significant events happen, and it's essential for keeping investors informed. Now, Figma is still considered an emerging growth company. This gives them some flexibility with reporting rules, but it also means they're still relatively new to the public market. Let's get straight to the juicy part, their financial results. As mentioned, they announced their performance for the quarter ending June 30th. While full tables aren't in this specific filing, the core message is that they're sharing these results with the public. They're committed to getting the word out through various channels, including their website, press releases, and even social media. It's good to see them being transparent about how they communicate important company news. They want everyone to have access to the information, which is key for fair markets. But there's more to this report than just recent performance. A big piece of news here is about something called stockholder extended lockup. Think of an IPO. That's when a company first sells shares to the public. Usually the early investors and company insiders agree not to sell their shares for a certain period, often around 180 days, so the stock price doesn't get slammed by too many people selling at once. Figma has extended this agreement with a significant chunk of their shareholders, about 54.1% of their Class A stock. This means these major holders have agreed to hold on to their shares for longer, until August 31st, 2026, or even a bit earlier depending on when the company announces earnings for certain future quarters. This typically signals that these insiders and early investors are still confident in the company's long-term prospects, otherwise they'd be eager to sell. However, it's not a complete freeze. A portion of these shares, about 17.5%, which is close to 39 million shares, will become available for sale after they announce earnings for the quarter ending September 30th. Then another 20% of their holdings, around 44 million shares, will be freed up after they report earnings for the full year that ends December 31st. But it keeps going with another chunk, about 27.5%, or roughly 61 million shares, becoming available after the March 2026 quarterly earnings announcement. Finally, the rest of the shares held by these extended lockup holders will be released, with the whole period ending by August 2026, or after their earnings report for the quarter ending June 2026. What this phased release means is that the market won't be flooded with all these shares at once, which helps maintain a more stable stock price. It's a managed release of supply, and it tells us these big players are thinking long term. Now, shifting gears a bit, let's talk about Dylan Field, the co-founder and CEO. He's put in place a Rule 10b5-1 plan. This is a common tool for company executives. Basically, it's a pre-arranged plan to sell a certain number of shares over a period, often to diversify their investments or manage large holdings. It's designed to avoid any appearance of insider trading. Dylan Field's plan, starting in November 2025 and running until November 2026, allows for the potential sale of over 3 million shares of Figma's Class A common stock. These shares are either owned directly or through related entities and trusts. This plan is set up to meet strict legal rules, ensuring that any sales are predetermined and not based on any new non-public information he might have. It's a way for him to manage his personal wealth while staying compliant with securities laws. The document also lists a press release from September 3rd as an exhibit. This press release is where you'd find the actual financial numbers we talked about earlier, like revenue and profit for the quarter. While we don't have those specific numbers displayed in this Form 8K itself, this filing confirms they've been released. And finally, the report is signed off by Praveer Melwani, the Chief Financial Officer. This confirms that the company is officially reporting this information. So what's the overall picture here? Figma is clearly managing its market presence very strategically. The extended lockup agreements show confidence from insiders and major shareholders, suggesting they believe the company's value will continue to grow. Dylan Field's diversification plan is also a normal, albeit significant, move for a CEO of a successful tech company, allowing him to manage his personal finances responsibly while adhering to regulations. The company seems to be focused on a controlled and orderly release of shares into the market, which can be a positive sign for stock stability. However, like any growth company, the real test will be in those actual financial results that are referenced in this filing. We'll need to see if the performance matches the confidence shown by the extended lockups in the IPO process. What's your take on these moves by Figma and their leadership? Do these extended lockups signal strong future growth, or are they just a way to manage market perceptions? Let us know your thoughts in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe to Corporate Decoder for more in-depth looks at the financial world. And definitely check out our Discord community linked in the description for even more discussions and analysis. Thanks for watching, and we'll see you in the next one.